right, hi everyone, and thanks for joining us on the daily currency call presented by Forex Trading Asia, and a lot of participation in the chat as well, which is great to see. So this is episode 392, nearly to 400 with the daily currency call, and it is the 8th of October. Now, if it is your first time here, a big welcome and welcome back to all the regulars too. And a quick introduction to the newcomers. So we do this currency call every Monday to Friday at 11 a.m. GMT plus 8 time zone. And the currencies we analyze are as follows. Mondays, we do the Aussie and Kiwi. Tuesdays, we do the Euro. Wednesdays, Pound. Thursdays, Yen and Gold. And then today, Friday, CAD and Crypto. And of course, we will also have the NFP preview thanks to Kim Hong as well to look forward to. So this is the currency call where you'll get market economic updates, the key support and resistance levels, trade ideas, and much more. This currency call is going to be very beneficial to both the long-term investors and the short-term traders. And here we will go through what could move prices, the possible trade ideas that are around, and we'll also highlight the potential targets and risks within those trade ideas. Also, a disclaimer, any information shared during this session is not intended to be a trade recommendation. It is solely the opinion and views of the speaker. So please remember to do your own analysis prior to entering any trades as well. And what I will add is please feel free to make sure you ask questions too if you are in doubt in regards to a potential setup. And always make sure that you risk a small amount as well per trade. So anyway, we do have Kim Hong up now, and he will be going through NFP, which is a significant event tonight as well. So I would really say, to pay attention. We share this update as well on the YouTube channel. Rewatch it. You've got plenty of time as well to prepare. And let's tune in now to see what Kim Hong has to say about the upcoming NFP later today. Over to you, Kim Hong.
All right. Thank you, Scott. Happy Friday, everyone. One of the most important jobs report of the year. Okay, why is this so important? Okay, because this may actually lead to a tapering announcement by the Fed in November. Okay, so before the November's meeting, all right, this is actually the last jobs report that we will be seeing. Okay, from the Bureau of Labor Statistics. Okay, which is why this will actually this may actually be a make or break kind of report, okay, for those who are actually expecting a tapering announcement to be made by the central bank, okay? So this time around, let me just show you the data, okay? 500,000 jobs are being, 500,000 jobs to be added is being expected from the market, okay, for the month of September, as opposed to the previous 235,000. Well, as we know, last month's report was a little bit disappointing, all right, 235,000 jobs, as opposed to the previous month of 900,000 and even 1 million, okay, due to the upwards revision. But there's been saying out there that, for the month of August, it's usually the month whereby people go on summer breaks and things like that, right? So making the whole data collection for employment a little bit, I would say vague, not say vague, but a little, there may be some discrepancies in the data collection process, okay? So besides the actual figure that will be released later on today, all right, pay attention to any possible revision to the August figure, okay, the 235,000 figure. I mean, if we were to see an upwards revision of the 235,000 to anything higher than that, of course, that is a clear, optimistic view, all right, coming out from the BLS, the Bureau of Labor Statistics. So that's one thing to pay attention to, all right? Second thing, 500,000. Do we really need that figure? Like, I mean, is it a good enough figure to actually trigger a tapering announcement from the Federal Reserve? All right. Personally, I feel that yes, 500,000, or if you see from other forecasts, states 490,000. Personally, I feel that this figure is a strong enough figure, right, for the Fed. In fact, my threshold, my cutoff would be anything above 400,000, all right? Anything above 400,000 jobs being added for the month of September, okay, will likely fulfill the substantial further progress criteria, okay, that the Fed wants, okay, for employment, okay. Remember that during the previous meeting, the chairman, okay, of Federal Reserve, Jerome Powell, actually mentioned that he does not require a stellar jobs report, all right, in order to, to be convinced that this substantial further progress criteria has been met, okay. So my personal interpretation is anything above 400,000, yes, we are good to go. We are good to go for a likely tapering announcement for the month of November, okay? I mean, during the November's meeting, monetary policy meeting, okay? So apart from jobs figure, all right, what other figures should we pay attention to? Okay, there's this average hourly earnings. Personally, this time around, I won't pay that much attention to the average hourly earning figure over here, all right? Yes, although there's an expectation that the for the month of September, okay, there's actually a decline, not a decline, but a slowdown in the earnings, okay, from the previous 0.6 to a forecast of 0.4. Now, the reason why I say that this average hourly earning data is not of a high level of importance this time around is because all eyes are on jobs creation, okay? The figure, the number of jobs being created for the previous month, okay? So unless we were to see a negative figure being printed out for the average hourly earnings, otherwise, unlikely there's going to be too big of an impact coming out from, whatever data, whatever number they're going to print out for these average hourly earnings, all right? So that's for the average hourly earnings. Another figure that we always pay attention to is the unemployment rate. Personally, I feel that this is a little bit tricky, right? So yesterday, during our currency call, one of our members, one of our audience, actually highlighted that unemployment rate is falling, is it good, and things like that, right? So I actually mentioned that today I'll be talking a little bit more about the unemployment rate, all right? So we are actually expecting a 0.1% decline in unemployment rate, right? Which is good, okay, which is good, no doubt. But remember, all right, there are actually two reasons why unemployment rate can decline, okay? First reason is because of an increase in the number of people who found a job, right? So, the more people who actually managed to find a job for the previous month, that will actually reduce the number of unemployed personnel, right? So hence, unemployment rate decline. That is straightforward, okay? Coming to the second point, right? A second point that the unemployment rate can decline is due to people leaving the labor force. Okay, what do you mean by people leaving the labor force? Okay, so the labor force, what is the labor force? The labor force is actually the sum of the number of people currently employed, okay, plus the number of people who are unemployed but are actively looking for jobs. Okay, let's say I'm currently unemployed and then I'm sending out resumes, sending out applications for jobs, then I will be considered part of the labor force. Now, suppose I'm unemployed and you know what? I decided to take a 6 months leave from the workforce, right? I decided to just chill at home and watch Netflix, all right? So am I considered part of the labor force? No, I'm not considered part of the labor force, okay? Because I'm not actively looking for a job, right? So with that, how will this actually, play a part in the unemployment rate, all right? So if, let's say, for example, the labor force has like 100 people and 90 of them are employed, 10 of them are unemployed, but are actively looking for jobs, okay? Now, come the next month, if they were to say that, if let's say 5 of them, okay, 5 of the 10 unemployed personnel were to say that, you know what, right now it's hard to look for a job. I'm just going to take a 3 months break, 3 months off from this whole job search and things like that. It's making me crazy, okay? I need some break. So they decide to stop looking for a job for 3 months, okay? The 5 of them. Now, with that, the labor force has just shrunk by 5 personnel, okay? So the labor force will be 95 there will be 95 personnel in the labor force as of next month. Okay, so with the shrinking of the labor force and the number of unemployed personnel being pretty much the same, that will actually lead to a lower level of unemployment, right? So is that a good thing? I mean, earlier on I mentioned that a decline in unemployment rate is a good thing, right? But in this case, because the decline in unemployment rate was due to people leaving the labor force, hence that is actually interpreted more as a negative sign to the employment market, to the jobs market. Okay, because consider the extreme case, all right? Suppose we have a high level of unemployment rate, okay, let's say 20%, for example, and then out of it, say for example, 80% of all those who are unemployed decided to take a break. That means no one, or hardly anybody, is looking for a job in the job market, right? So that means that relates to lesser number of people working in that country. So how are they going to contribute to the national income, right? Through taxes. So if they don't work, then how are they going to contribute to the national income? They can't, right? So that will translate to a negative impact on the country's economy. Okay, so which is why I mentioned that these two reasons, okay, increase in the number of people who found a job and people leaving the labor force, are the two reasons that unemployment rate can decline, and one of them being good and the other one being viewed negatively. Okay, so with that, if we were to see a decline in unemployment rates, all right, so what's the next step, right? Should we be happy? Should we be negative about it? I would like to bring you guys to the next indicator, economic indicator, the participation rate. All right, so previous month the participation rate is 61.7%. now participation rate is the measure of how many people actually participate in looking for jobs. Okay, so simply put, if the 61.7 figure were to decline to, I don't know, okay, were to decline, right? Simply put, if the 61.7 figure were to decline, that means, there are actually more people leaving the labor force, all right? Maybe like taking a break, or, just decide to give up on job seeking, jobs hunting, and things like that, which is usually viewed negatively by economists. Okay, so I think during the COVID pandemic, when it hits last March, okay, last year's March, all right, there was a strong increase in unemployment rates, and there was actually a strong decline in participation rate, because it's just simply hard to look for a job, in the early stage of the pandemic, right? So right now, the figure is pretty much more or less stabilized, but we still want to pay attention to it, right? So if we actually see a decline in unemployment rates and we see a decline in participation rates, then, not too positive, I would say, right? Coming from the unemployment rate indicator. Now, suppose we were to see the participation rate remains unchanged or even climbing higher, while the unemployment rate were to decline, then we are very confident that the reason for the decline in unemployment rates was due to an increase in number of people who got the jobs, right? Increase in jobs creation and things like that, right? So with that, this is the point that I want to highlight to you guys. Okay, if you guys are planning to trade the non-farm payroll tonight, personally, I feel that there's going to be move. Okay, there's going to be a lot of opportunity tonight. All right, but pay attention, because the report will be released at 20:30, while the US market opens at 21:30 GMT +8. So personally, I feel that it's better if you guys can keep your trade short term. Try not to hold past the US market opening at 21:30, because when it happens, usually we will receive breaking news like, Dow Jones or major US indices saw due to outstanding jobs report, things like that. But when these kind of things happen, there's usually a trade-off, right? When the stock market were to rise due to a positive sentiment, from the market, that usually may lead to a decline in currency. In this case, the US dollar, which is why sometimes when we have like good economic data releases, for example, a good jobs report coming up from the Bureau of Labor Statistics, okay, we see a weakening in the US dollar, okay, we start seeing the weakening of the US dollar across the board, right? So that is one of the possible reasons why US dollar weakens from time to time, although there are actually positive economic data releases. All right. So long story short, keep your trade short term, try not to hold it past the 21:30 US open hours. Okay. So with that, let me see if there's any other questions. How do they determine, no wait, blah, 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 blah. How do they determine the number of people actively looking for
leave applications?
Sorry?
There's a very important comment there about your leave application.
I'm sorry?
There's a very important statement there about your leave application.
Any leave application from you, especially 1 to 3 months after we rejected? No way.
Just to let you know. FYI.
Okay, that's just a comment. I want questions, okay? How do they determine the number of people actively looking for a job? Okay, so there's actually a census. It's a very rigorous process, okay? From what I know, it's a very rigorous process. So they actually go around carrying out surveys and census in the United States, because I was there for a few years before, and they actually sent me this, I think, survey that contains hundreds of questions, asking about many, many things. Are you looking for a job for the next 1 or 2 months, 3 months? What education level do you have, and things like that. So it's basically survey, okay? And yes, actually, speaking about how do they, gather the data during this period of time, the pandemic period, there's actually, unfortunately, there's a lot of discrepancies, all right, in terms of the data, which is why we see several revisions for the past few months, upwards revisions, downward revisions, and things like that. But, okay, regardless, the first impression still plays the most important role, all right? The first impression meaning the jobs report the figures that will be released later on at 2030, okay? So traders will usually trade based off that report. And then, if there's any potential revision, next month we'll be seeing it. It's just like how later on we'll be seeing any potential revision coming out from the August figures, okay? Which is why I highlight that there's the whole previous month revision figures will actually play an important role as to whether or not the US dollar will strengthen or weaken based on the report, okay? So there's another question. So would that counter a good NFP number or little effect? Would that counter a good NFP number? Okay, what would counter the unemployment? Okay, yes, it will, but the impact will not be that big. Okay, remember, out of the 3 main economic indicators that we are focusing on, okay, the average hourly earnings, the non-farm employment change, and the unemployment rate, okay, at the moment meaning like this current report, the non-farm employment change indicator is the most focused on. It holds the heaviest, the biggest weight, okay, in terms of whether the Federal Reserve will be announcing a tapering announcement in November, okay? So unless we see unemployment rate rise by, I don't know, 1 percentage point or 2 percentage point, things like that, otherwise, unlikely is going to have a big impact. Okay? So the NFP figures, is still going to be the main, I would say, the main limelight, okay? It's going to have the biggest impact, okay? Unless we're going to see like, big steal off from the other figures, okay? Which is unlikely, to be honest, which is unlikely at this moment, okay? So you said USD will weaken even with good economic report. Why? Okay, so you see, the thing is, many times when we have like strong economic data releases from, even for any countries, okay, it can be UK, it can be coming out from the Eurozone, or maybe even Australia, okay? What does that mean? Okay, that usually indicates a optimism coming out from the market, right? They will actually cause optimism from the market. Say, for example, right now, the US jobs report released to be very good, stellar jobs report. What does this mean? This translates to the US jobs market is recovering very, very strongly. Okay, it's resilient against the pandemic, right? So if let's say the US mature market were to recover strongly, with that in mind, what would be the first thing that comes to the investor's mind, right? It would be that, oh, in general, the US economy is doing well. So with the US economy doing well, what I would like to do is to make more investments into the US market, right? So stocks, futures, and things like that will likely soar due to all this optimism being sent out from the positive economic indicators. Okay, so and there is a direct, I would say, a negative correlation between the stock market and currency. Okay, think of it this way: if I have a sum of money sitting in the bank earning decent interest rate, and then right now, you are telling me that, oh, the US economy is doing fantastic. All right, the stock market is just soaring. Would I still keep my money in the bank? Unlikely, right? I will actually take my money out and invest in whatever stocks that's soaring. Apple, Google, Tesla, anything, even Bitcoins. Long story short, I'm actually more willing to take up more risk. Okay, my risk appetite has just increased instead of the previous. I'm just going to keep my money in the bank where it's safe. Keep my money with bonds where it's safe and things like that. All right. So that is why we are actually seeing, at times we are seeing a strengthening in the stock market as opposed to, the expectation that the US dollar should strengthen. Okay, so if you guys, well, there's actually a lot of explanation to be done. I'm just touching the surface. If you guys are interested, we can actually bring it over to the Ecofin platform and we can talk more about it. All right. So any more questions? Okay, not at the moment. So yeah, if you guys are trading the non-farm payroll jobs data released tonight, later on, yeah, just keep our trade short term. All right. With that, I will hand it back to Scott.
Thank you so much for that, Kim Hong, and thanks everyone for the questions as well. Noah does like to test you out, which is always interesting to watch. So thank you, Noah, as well. And that's exactly right. Reach out to Steve about Forex Briefcase, guys, because I think it's 33 winning trades in a row. The whole year's been positive as well. So definitely worth taking that up as well. So just quickly from my end, there's not really much to talk about for the US dollar because Kim Hong did a fantastic job, but I'll bring the chart up here. And I would say that, if you were trading last night, well, for us, it's last night in this time zone, I would say that it was quite a dynamic session in regards to how some of the pairs moved. For example, the Aussie dollar in particular, which I monitor as well as the US dollar index, was quite interesting. We saw the US Congress essentially announced that the debt ceiling would be moved, the deadline would be moved into December. Now, really, that doesn't offer much in regards to actually properly resolving things, but with how chaotic the US Congress is, it seems right now, because some of the Democrats can't even agree with fellow Democrats, I would say that this was a good, thing. Now, in regards to the risk sentiment, we did see stocks rally, which was a little unexpected. And something that I would say as well, for people that are following, currencies such as the Aussie or the Kiwi, those risk-sensitive currencies, we are seeing a bit more upside. So what we have seen recently with the US dollar, if it does move higher, we do see the stocks moving a bit lower. But what I mentioned in the morning market update, if you are in the LCMS Traders Club, the US Treasury 10-year bond yield was up over 1.55%. So it's almost a little dislocated from what the stock market is doing. And also the US dollar didn't really pull back a lot either based on what the stock market did. So I would say when it's like that, it becomes a bit tricky because usually you want to refer to a few factors before getting into a trade. And when they become a little bit conflicted, then you've got to really say, okay, how am I going to approach this? And, quicker trades is probably best. Now, with the NFP coming up, like Kim Hong mentioned, it's going to be quite interesting to see what the results are. And then if you are looking or you are in a trade, it's probably not worth, if you're, with the US dollar in the pair, I wouldn't be holding it into it and rolling the dice. I mean, it is up to you, but you've got to be aware that it's going to be a big moment and there's going to be a lot of up and downside as well in those, first 5 to 10 minutes or so. In regards to the US dollar upside potential, I would have to say it still exists. Now, I did mention in the post I made earlier today that I would have liked to see it come down a little more, which would have been a nice, simpler trade, because if you see NFP come in higher than expected, that's going to be fantastic. If the Aussie dollar is at 73.30 or 40 and NFP comes in big, that's going to be great for the US dollar and it's going to be a nice trade there. But it's a bit complicated and a bit messy now. So where we go with the US dollar, it would be hard to say that it's going to be a really weak NFP figure. I would say that around 500 is fair, maybe a little less, but it's still not going to cause this dramatic weakening in the US dollar either. So I would say a very conservative approach would just be to wait until, Monday to see how things settle. But if you are looking to trade, shorter time frame, we will be in the LCMS Traders Club as well. And I've shared the link there as well in the chat about the free 1 month trial as well. So I would definitely click on that for the LCMS Traders Club and get on board for that. But really, I think the news for the US has been covered pretty nicely. Now, we do have the CAD in focus with Jin now as well, multi-million-dollar trader, and he'll just go through, what is happening. There is a little bit happening on the CAD as well. So I would definitely pay attention. It's been a bit of a longer call, but there's a lot going on as well. So we've got Jin up now, just discussing the CAD pairs and what's going on with that. Over to you now, Jin.
Thanks for that, Scott. Well, we had to follow up yesterday's short currency call with today's extended currency call. So I hope you're all enjoying the information that we've been sharing with you so far. It is non-farm payroll Friday. Check out the background. There is possibly going to be a lot of consolidation from now till the non-farm payroll gets released, which would actually give you a good opportunity to plan your trades a bit more. I ran the poll for non-farm payroll. I'm just sharing the results. I'll just share the results with you guys. We've seen that, well, almost half of you who have voted said that the release will probably beat the forecast, and then a good split between lower than forecast and as forecasted. One thing I want to, impress upon all of you is that as much as we talk about the non-farm payrolls, as much as we try to analyze and try to run scenarios of what could happen during the non-farm payrolls, bear in mind that it is almost impossible to predict what the non-farm payroll numbers will be. How you should approach this is to run it in terms of scenarios, whether it's a good news, which trades to look at, where to enter, where to buy or where to sell. If it's a bad news, what to pay attention to. And if you sit there and it's a mixed bag of data, then what not to trade, or just turn off your computer and enjoy your Friday. So different ways to approach this as a news. You don't have to always jump into trades, and definitely don't try to predict the data. We've seen that with all the forecasts over the many years and many months of non-farm payroll. Even the top analysts have not been able to predict it with any level of confidence or accuracy. So as a trader, what you want to do is see the data, have your plan, see the data and react accordingly, whether it's to the upside or to the downside, or if you're going to manage it very closely, you could even take advantage of the volatility and trade it both on the upside and downside. Like Kim Hong was just saying, one of the things that I'll be doing tonight will be to look into the non-farm payrolls and trade the Forex briefcase MEM and try and extend, like Steve was saying, the 33 winning trades run. So with that said, it is going to be interesting. It's going to be an interesting Friday, non-farm payroll Friday, primarily because not just what's going to happen in the non-farm payroll, but with the focus on the Canadian. You can see here on the Forex Trading Asia Economic Calendar, today being Friday, We've had some news already, not much happening there. Haven't seen prices move too much, but I'm not going to tell you about non-farm payrolls. Kim Hong has told you everything you need to know about non-farm payrolls. What you need to know is that we have Canadian employment numbers coinciding with the non-farm payroll. And the thing to pay attention to here is employment change, looking at a 65K, expected of 65K, but the unemployment rate for the Canadians looking to go from a 7.1 to a 6.9. That's a very significant drop. My throat is going. That's a very significant drop if it does happen. So what this could mean is that as we expect good US data, we're planning for good US data, that US dollar strength to be applied, we also could anticipate some Canadian strength, some strength in the Canadian dollar. So how do you put all that together? It is quite straightforward. Here, looking at the charts, the US CAD on the H4 time frame currently sitting at the 1.2549 level. What I think is going to happen might sit across for now. When the non-farm payroll comes out, we're possibly going to see that good number. With that good number, we're going to see a strength in the dollar. With that strength in the dollar, a push up towards the 126.18 resistance. Push towards the 126.18 resistance. But because we do have the Canadian unemployment rates possibly going from 7.1 to a 6.9, I think that strength to the Canadian dollar will come back into play. And if we see on the US CAD strength on the Canadian dollar, we could see it track back down towards that 1.2456 level. So what you could do here, or what you could look to trade here, is possibly not to trade it up towards the 1.2618. I think that move towards the upside is only about a 60 pip move. Not great. I think it's going to sit across, slowly move up. And when the news comes out, it might even look like it's going to break that level. And we do see the accompanying Canadian data, we could see that drop. So what I'll be looking for is selling opportunities below 1.2618, maybe about a 1.2598. You would have a 30, 40 pip stop loss for a good 120 pip take profit level. You're looking at a 1:4 or 1:3 risk reward ratio towards the downside. For Traders Club members, what you would also notice is that on last Monday or 2 Mondays ago, I shared about the Canadian US CAD to sell towards the downside, made money on that. Just on Wednesday, 2 days ago, I was sharing here on the live trading session where we were looking to sell the US CAD towards the downside as well. This was the YouTube video is there for Traders Club members. So we actually sold that and we did see it drop towards that 2-day low point and slightly beyond. So I'm still looking at a continuation of that move. I'm still looking at this as a 3-part trade. So every time it bounces back up, coming back to the charts, testing that 126.18 level, I think that's going to drop further. If it does that again today, testing that 126.18, I think it's going to drop further back down again. Relatively straightforward trade for the US CAD tonight, but it will depend on the data, not just from non-farm payroll, but also the Canadian employment numbers. With that said, I want to do a quick recap of what we've been going through this week. The Aussie hasn't broken lower as we saw the US dollar retrace a little bit. The euro is still sitting in that consolidation, which actually has been quite extended. And those of you who have gone through the straddle trading strategy that I've shared with you all quite a while ago, this might be a good setup for a straddle strategy there. So watch out for that. The US yen is breaking off that 111.54. We possibly could see that trade continue higher. What I really like is the pound yen, which has been pretty much following that red line so far. So if you did jump onto the call yesterday and looked at the pound yen, you would be about a 60 something, almost 70 pip towards the upside right now. There is still a little bit of a move to go, about another 40 something pips, but be very careful once it approaches that 152.60 level. So a lot of things, despite not a lot of news, despite a non-farm payroll week, despite that consolidation, we have seen some trades running quite well as we analyzed. So with that said, I will pass it back to you, Scott.
And Jen, Noah's just got a question here about it, just came in then. What would you do on the USD CAD if the US job report came in below expected?
Okay, so one thing, no one's always with the questions, right? No, I'm going to start charging you for questions now. Well, what to do with if the non-farm payroll comes out below expected or worse than expected? It would be quite interesting, especially for the US CAD, which means that we could see it, same thing, not go up, but I think it will still go up because, you know, the expectation is there. We might be hitting some stop losses. We might be hitting, or the market might be hitting some stop losses, or people might be front running the trades. If the numbers do come out worse than expected, we are going to see that drop, that dollar weakness plus the Canadian strength. We're going to see that drop towards 124.56 and possibly breaking past that point. If it does break past 124.56, don't get over excited about it. If I go to daily time frame, you can see that this is a very, very low point. The last time we reached this level was back in July, and well, late and early July, and then after that again in June. So if it does break past this point, I anticipate a lot more volatility, possibly going to test this point. I don't think it's going to break and drop significantly towards the downside. I think we're going to see a lot of volatility at this support level before any further reaction or any further decisions on the Canadian dollar. I hope that answers your question, buddy.
All right, no worries at all, Noah. And so just finally, guys, as well, it is Friday. So for the crypto traders out there or anyone interested in learning about crypto, we'll just quickly go through Bitcoin and Ethereum now and what is looking like any potential trades that are here. So look, crypto is mentioned once a week here as well. And I personally hold Bitcoin and Ethereum as well. We have seen a considerable upside recently too. And you know what has been going on is that there are pressing inflation concerns that are still existent. And what we have really seen is that gold has not really been responding as you would, you know, typically see it in an uncertain environment that is currently very much existing. So with Bitcoin, we have seen it clear that 52,000 high recently seen. And now this is the daily time frame, and you can see we are taking a pullback now. And if I go to the 1 hour time frame, I mean, the easiest thing would be just to probably wait until it gets to 52, because, you know, to say, let's take a breakout now, I would probably say the conservative thing would be to do is to wait for that NFP figure to come out, because if we see a really strong figure, and it would make sense that, oh, you know, cryptocurrency will rally, but it just creates, you know, a situation of a bit of chaos, you know, during that time of release. So I would say wait for, even if you've got pending orders and stops in, you know, the conservative thing would be just to wait, just to see, because, you know, crypto and especially Bitcoin love a lot of volatility and big wicks as well, where you could get a big wick to the downside and then it shoots up. So wait for all that to happen, and then an entry at around 52 as it clears 52,000, even, you know, 53,000. And then again, with stops and things like that, you've got to be a little conservative. That's why to trade crypto is very difficult. And if you're just adding to a current long, you would just, you know, add a small amount in and leave it be, is how I would approach it, instead of, trading cryptocurrency, you need different platforms for that other than just MetaTrader 4 would be my recommendation. Now, also, we've got Ethereum too, and it's a pretty similar, although we actually saw it rally a bit more. And again, it's the same, same method really with what we've seen with the US dollar and also the concerns about inflation. We're seeing what looks to be like more inflows just as a hedge here too, with the increased concerns that are present. So with this, we have seen it break out of 3,000. And, would I say, wait till it gets back to 3,000? You have to see where this pullback goes. So if you go to the hourly time frame, it's been uptrending quite nicely. We're currently flat. And again, in the lead up to big news, you'll see the markets just happily hover sideways. So again, what I would do is just wait and see if we can get a pullback. But really, we were talking about this a couple of weeks ago, and it hasn't really wanted to come back to 3,000. So that's going to be a pretty aggressive pullback on Ethereum. And we've just seen crypto recently, even with the China crackdowns, which have happened before, it's the long bias is definitely with Ethereum. But when it comes to value of an entry, I would just say, you'd want to wait to see what happens this evening and how markets react as well before just jumping in, especially if you're looking to take a bigger position as well. This 3,000 level, or even 3,300 or so, would be a little bit more opportunistic than just waiting or even just getting in straight away. You'd want to just have a little bit of patience. But those are my thoughts there. And we are in the Traders Club chat as well for anyone that's looking to touch base and ask questions too. I've shared the links there for the 1 month free trial as well. So make sure you just fill out your name and email, and it's as simple as that really, and we'll get you in. And we've had a lot of people come in and enjoying the chats and asking questions. So make sure you do that. But look, guys, that has been the end of the call now. Thanks again for all the participation. I have noticed the chat too. We've got, yeah, I agree. Yeah, gold might look. But again, everyone that is in the chat, make sure you hop on as well, and we'll be there ready to help out. But that is it for Friday, guys. Thanks again for joining us. And we've had some consistently higher numbers as well with people watching. So we appreciate that. And yeah, that's it. NFP is going to be big. So be safe, guys, when you are trading. And thanks again for everyone watching. I'll stop the share. And thanks everyone for asking heaps of questions as well for Gim Hong. He just loves it. So thanks, guys.